When you're transferring your assets, cash, or needing to sell a property to another one of your companies, does the taxation work? What is the correct way to do this if you're transferring assets or cash needed to another company? Well, Douglas, it really depends on how your structure is set up and where we're trying to get the money. If you're just trying to get it into an LLC like this, there's two ways you can do this to fund. So this is where I need the money, and I'm down here. Well, the first way to get the money up here is through a contribution. And what that means is you'll take money from your personal account, you'll first move it into the blue box, the Wyoming LLC, and then from there, you're going to move it into the red box. And so that's called a contribution, is what we're doing there. And you would list it as such. Now, the thing about making a contribution is that if something goes wrong up here, you risk losing any amounts that you contributed. That means you're an unsecured, you're not even a creditor. You're unsecured there. You're an investor. So there's no protection for you. So the other way you can do this is via a loan. And the way you could do that is you could just loan money to the LLC directly, or you could contribute it here and then loan money to here this way. It's probably better if you did it through your blue box, so you maintain the anonymity so your name doesn't appear anywhere on that property. Now, if you loan it, then what happens is that you would record a deed of trust against that property after closing. So you wouldn't want to do it, until after you've closed on the property, because you're probably going to have a first position lender there. So what happens now on this property, let's say I bought the property, I have a first with Wells Fargo for $120K, and then I have a second with Blue Box for $60,000 against that property. So the total debt now is $180K against that. Now, with the debt, if something were to happen with that property and a creditor came after this company, secured creditors are the first ones to be paid, meaning this, that if the property was sold at auction and it brought in $200,000, Wells Fargo gets paid back their $120,000, Blue Box gets paid back their $60,000, and then that leaves $20K to go to your creditor. So this way you can make sure that any capital you're putting into that investment, that you're going to be secured in the investment. So if something ever goes bad or south with it, you get paid. So a loan is another way to fund a deal rather than just making a transfer of cash directly in.